welcome. You're watching Commodity Champions and I'm Anisha Gupta. It has been a fairly good start for the industrial metals in 2023 with copper, aluminum and zinc nearing 7-month highs, supported by weak US dollar and China's economic situation. On a monthly basis, copper prices have surged 12%, zinc 14%, but tin has seen a big rally and gained 23%. So will the metal space sustain gains this year? What are the factors that will impact the prices? To get answers to all of these questions, I am now joined by Ole Hansen. He's head of commodity strategy at Saxo Bank. Ole, hi, good to have you. And what a start to 2023. The whole metal sector has been abuzz. Is it all the China pent-up buying, or do you think there is actual on-ground buying and not just the sentiment playing part?
I think as we start the year, it's a lot to do with sentiment, to do with the markets or traders positioning themselves into markets they believe will have a good run in 23. So obviously we kicked off the year with breaking out some key technical levels that has triggered some additional momentum buying. So basically what we're saying here, both for gold and industrial metals, is that while we believe the direction is correct, we think the timing may just be a little bit off, because right now I think it's mostly just investor buying, getting into the market, and following that we need to basically, the hard work really begins. That's when we need to see that real demand also actually picks up to justify the price levels that we have achieved over the last month.
Well, absolutely. How much is the part inventories playing here also, Ole? Because we've seen LME inventories decline to half of where we were in 2021. And the chart will show you on how nickel, zinc, aluminum, all of these inventories have declined anywhere between 40 to 80% in 2022.
Well, visible stocks across the industrial metal space it's pretty frightening graph. If you look at the long-term developments, that they are very weak or very low if you look at visible stocks in monitored by exchanges in London, Shanghai and New York. And that does obviously raise the question about what happens if we do see that potentially strong pickup in demand at a time where you could also argue that supply should not be forgotten. The supply side is also somewhat challenged. We've got with copper right now, the riots in Peru having an impact on potentially 2% of the global output. And it just highlights also that even though there are expectations for industry responding to higher prices by producing more, there are challenges ahead that would potentially keep that supply at a relatively low level, and that will underpin prices as well.
I'll take the question different for both. Starting with supplies first, and we do understand that there are inventories which are already on the lower side. How about the capex investments? There are some labor negotiations also coming on the way. What is it that concerns you the most about supplies?
Simply that prices are actually, even though they are relatively high, they're still not high enough really to incentivize mining companies to go all singing, all dancing into finding new projects. And at the same time, we're also seeing that ore grades is coming down. So you need more material out of the ground in order to get the metals that you're looking for. It's you mentioned wage negotiations. That's going to be a very tricky one. So general cost of production has been going up, and that basically means that we need high prices in order to sustain the outlook for investments and the ability to produce the metals that we are going to be requiring in the coming years, especially as we continue to move towards the green transition, which we all know requires metals of all shapes and sizes and colors.
So, various banks and brokerages, including yours, all have mentioned that the metal prices will go up from here. And if I read all of those reports, the increase, the consensus falls between 10 to 20% of a forecast. What is your sense on what metals are expected to do better than the others?
Well, I stick with copper. I really like copper. I like aluminium as well from the supply side perspective. These are metals where we're also seeing quite a lot of the concentrated interest from investors coming in. So that these are really the ones I like, and I stick to liquidity. You mentioned tin, 23% up. It is obviously a very dismal liquidity market, which obviously is only primarily used by actual physical users. So I keep a close eye on copper and aluminium, I'll say.
And how much of gains are you anticipating for this year?
Come again?
Ole, how much of gains are you anticipating for copper and aluminum for this year?
Well, I wouldn't be surprised if we do see a new record high in both copper. 10,500 level is obviously within reach, but I believe we will see a pause here within the next month or so. So, as I said, the direction is right, the timing is slightly off. I want to see the hard work now to also support the pickup, and that potentially may not come until the second half. So still believing that we could see these new record highs as we move into the second half, after a bit of a lull here as we move towards the second quarter.
And while the Chinese demand is something that the markets seem to be playing on right now, what's your sense on the developed world? How do you look at the Europe demand coming back, US same?
Well, the energy crisis in Europe has obviously been called off. We were obviously saw a lot of reports, everyone getting busy about calling the end of Europe at the end of last year. It hasn't happened. Industrial production is holding up, even though gas demand is down in places like Germany by 20%. So we learned to live with higher price. We now rationalized, and we're now seeing the impacts. And obviously, Germany, as an example, is very dependent on demand from China. So if we do have a positive China story, that will also likely be a positive Europe story. A little bit more concerned about the US, because obviously we got a lot of conflicting data there right now. We saw the leading indicators yesterday, just basically highlighting that we will see a recession within the next few months, even though it may not, the next few quarters, even though it could be a shallow one. It will raise some concerns about the demand outlook in the US. But generally, the transformation process that we're seeing is ongoing, and it will be continuing at a very brisk pace, almost no matter the level of economic activity in general.
All right. Before we take a break, Ole, I also want to understand on what's your sense on the precious metal. I mean, you've talked about gold, and we have Philip and Michael absolutely waiting on the other side of this break to talk about that. But let's start with you. What's your sense? How do you look at the precious metal prices right now?
Well, we liked gold throughout last year. We thought gold had a fantastic 2022, trading unchanged in dollars at a year where we had a massive jump in the dollar, a massive jump in yields. Now some of these are starting to reverse, and that's obviously providing a lot of tailwind. At the same time, as I said, we got leading indicators potentially indicating a recession that's bringing down the risk of higher interest rates, and that's bringing down the dollar as well. So all in all, it's really almost a Goldilocks outlook for the metals right now. Just like copper, I just want to be a little bit devil's advocate that it's happened maybe a little bit too fast and too soon. And with that in mind, I'm looking for better buying opportunity than current levels. But the direction for the year that we're seeing started with gold is the right one. Silver, I'm a little bit perplexed about. It's not following suit, even though we have the strong rallies in industrial metals. So silver is silver and platinum is still waiting in the wings, but gold for now is the one that's attracting all the attention.
Oh, it absolutely is. $19-30 ounce plus kind of levels is what we're trading on. Ole, as always, thank you so much for joining us and taking through us all those metal prices there. But with that, it's time for a short break. But do not go anywhere. We shift focus completely to precious metals when we return. Welcome back. I'm now joined by Philip Newman. He's Managing Director at Metal Focus, and Michael Dirienzo is Silver Institute's Executive Director. Gentlemen, thank you so much for joining us. And what a start to this year when you look at gold prices. So, Philip, the first question really is to you. So, while we are trading at an 8-month highs in the international markets, India has been making all-time highs for last 4 or 5 sessions, including today as well. How do you look at the currency play, and what's your sense on where the gold prices are headed?
Well, I think you made some very good points there. And of course, if we look at the dollar, it's now on a trade-weighted basis, back to levels or down to levels that we last saw in June last year. And so I think that is certainly one of the key factors that is helping, I think, to support gold prices. And of course, part of that relates to the interplay with other key central banks. We've obviously had comments very recently from the ECB looking to lift rates and maintain rates higher for longer. And that sort of sits against market expectations, at the least, that the Fed will start to adopt a much more dovish stance, hence why we've seen the dollar come under pressure and therefore supporting gold.
Oh, absolutely. And what a strong run-up. Apart from central bank buying, as you said, the currency clearly has a bigger role to play here. Michael, hi. And even as everything has it working for silver prices, and last year was a good one, but the start for this year hasn't been so great. What do you put that to?
Well, look at, I mean, last year's average price was around $21.90, and right now we're averaging $23 for the first, 3 or 4 weeks of January. So we're quite optimistic about the silver price in 2023. And we think the fundamentals are strong, which will lead to a higher price throughout the year.
Michael, a major buying clearly seems to have come in from India, where we've imported record quantity in 2022. Do you see that pattern repeat itself in this year?
It very well could. Look, we're actually coming to India this year, the Silver Institute. We're doing a conference in your great country in late April, and we'll have more information after then. But the conference will include fabricators, jewelers, end users, miners, and so forth. And I think it's a perfect time to come to India. It's the inaugural India Silver Conference in Jaipur in late April. And quite frankly, we think that there'll be some good news coming out of that conference. Thank you.
All right. Philip, are you joining Michael for this conference in India in April?
I will be in New York with Mike just before that. But we've got, a fantastic team based in Mumbai, as you know. So Metals Focus will be very, very well represented at the conference.
All right. We look forward to all of that. So, talking back to gold yet again, Philip, what's your sense? Because it really is a divided street on where the gold prices could be headed. I mean, as Ole from Saxo Bank was telling us that they expect the gold prices to continue to run and perhaps make all-time highs as well. And that is what at least 70% of banks and brokerages believe. What's your own sense?
Well, I think from our point of view, the key issue is that market expectations, that I mentioned earlier, is that the Fed will take a dovish stance much sooner rather than later. Whereas if you look at the Fed dot plot, it's saying that the Fed will maintain rates higher for longer and may not start cutting, either they'll wait until very late, 23, or perhaps only do so in 24. So you do have quite a dichotomy between what the Fed is saying and what markets expect. And so from our point of view, we think that the Fed will maintain that sort of that strict policy going forward. And so as we go into the back end of 2023, you're going to have a scenario of inflation falling very clearly and quite significantly, the Fed maintaining rates, and therefore that suggests that real rates will increasingly rise. We think this will gradually be supportive for the dollar. And so those two will act as, I think, considerable headwinds. We could therefore see liquidations by investors in the back end of 23. And so from our point of view, as it stands, we think that prices will weaken during the second half, perhaps falling to around the $1,600 level. Now, I know that's not a consensus view, but that's where we probably think that the prices will head.
Oh, we do get the possibility of that, Philip. It was September that we were trading around 1,600. We're trading at 1,900 right now. So, well, yes, getting used to that volatility. But also talk to us about the physical buying. And Indian markets, even as this is a wedding season, have seen lesser buying with the kind of run-up that we've seen in prices. China, in the meanwhile, has been buying a lot of gold. How are you looking at the buying patterns around the globe?
Well, I think if we focus on India, as you said, the fact that the price has hit record highs in rupee terms very recently, and against the backdrop, as you said, of the all-important wedding season, I think, the both consumers and fabricators are still wrestling with that, still coming to terms with that. The market has certainly backed off. And of course, you throw into the mix that we've got the budget, just a couple of, almost like a week away, really. And there are rumors circulating. Will the government reduce the duty on gold? And of course, that uncertainty, therefore, encourages the market just to pause and perhaps to run with slightly lower stocks. So I think we're certainly having to contend with a weaker Indian market as it currently stands.
Silver, Michael, we've seen strong demand. We've seen investment demand come in as well. The markets also are looking or anticipating a huge amount of industrial demand going forward as well. How are you looking at all of these brackets? Where do you see a major growth coming from?
So, look, Manisha, thank you. We think that the whole green energy transformation is going to help pave the way for silver going forward, and not just in 2023. Look, last year we had a record year for industrial demand in terms of silver, and we think it's going to be even stronger this year. Quite frankly, when you look at the solar power installations throughout the world, as well as the electric vehicle increase, and sales and usage throughout the world, not to mention the charging stations, we think it's a win-win. And more importantly, as these economies start to pick up steam, in China, for example, we're going to see hopefully stronger output from China on the industrial side, which will be a win-win for silver as well.
Michael, are there any numbers that you can share with us on what's your sense on the availability, demand growth that we're working with for this year?
Yeah, so, when you look at industrial silver, we looked at about 536 million ounces of silver last year, and we think it's going to run up to about 550. So that's a significant increase. We think there'll be increases in other factors. Investment demand, of course, is one of the key players, and we're keeping a close eye on that. Had a very, very strong last year, of course. And we're looking to India as well. And we put out a report yesterday called Trends in Indian Silver Investment, a very comprehensive report that looks at the 4 key aspects of investment demand in India. And, quite frankly, it's getting a lot of attention. And I encourage your viewers to come to our website at silverinstitute.org and download a free copy of that report.
Just to get a sneak peek into the report, Michael, we do understand that silver buying now is becoming easier in India. It's about physical buying, futures, ETFs, and digital silver buying as well. What trend do you see picking up?
Well, look, we think that the physical buying is going to continue. And if you look at the years of 2010 through 2022, you're looking at over 730 million ounces of silver were purchased by Indian investors. And when you extrapolate that into 1 year's mine production, last year, that represents about 90% of global mine production. So we're excited about what's happening in India. We're also excited about these new green shoot opportunities to the Indian investor, including ETPs and digital silver. I mean, ETPs came on the market in September of 2021. And now you're looking at about 8 million ounces of silver in those products throughout the country. So that's rather encouraging.
It sure is. But, Philip, this question is to you. And it's not always that we see demand and price movement go hand in hand. I mean, the physical buying clearly is not supportive of where the gold prices are going, but we have seen gold prices totally run up. So what's your sense on what is the kind of demand that we could see for gold? And is it going to be really in relation to the prices? Because when gold prices go down is when the demand goes up.
That's absolutely correct. You've nailed it on the head there. And the fact that, we do think that prices will, as I mentioned earlier, weaken as we move through the second half of this year. We think that will present buying opportunities. And so we are, from a global standpoint, fairly optimistic for jewellery demand. In terms of the coin and bar space, it's had an exceptional 2 or 3 years in a number of key jurisdictions. And I think early signs are that will continue. We could see perhaps a little bit more selling back in some locations. But as we've started this year, lead times are still fairly generous for product delivery to the dealers. Premiums are still elevated, be it from Germany or the US. So I think there's enough signs there, I think, to be encouraging from us, Metals Focus, from a supply-demand standpoint.
Philip, what would you advise your investors if they had to put money between gold or silver?
Oh, good question. well, thankfully, we're not FCA approved, so we can't give advice. I think there will be opportunities on both counts. What Michael was saying in terms of where industrial demand is heading, that will be supportive of prices. The fact we've had the end to zero COVID policy in China, again, as Mike touched on as well, optimism around China. And as your last speaker was saying about the where base metal prices are heading as well. So I think there is some optimism in that regard. But as I said, you set that against our view that as market expectations adjust what the Fed will do in our view, then you have that weaker tone in the back end. So there'll be some buying opportunities. But again, you sort of set that against, we do think that prices will, as I said, ease back as we move through 23.
All right, and we will watch out for that. But with that, that's all the time that we have on the show. Michael, Philip, what an amazing conversation with both of you on the show. Thank you so much for joining us. That's all that we have in this edition of Commodity Champions. Thank you for watching.